Yes, the news has been in town for over a week now. Really, I think it's month end and then people have to take profit. Short-term investors will just key in for marginal profits, get in and then get out probably at the right time. It's not about the news just waning in. It's something that will go on for a while, just, as you know, because we expect the actual set-off of the institution probably in September, and then it takes off all through the end of the year. So activities will still come in good and positive on that information, really.
All right, now let's talk about the state of the market itself, or the institution that is in charge of directing the capital markets, the Nigerian Stock Exchange. Some reports of impropriety at the Nigerian Stock Exchange. They've grossed in earnings about 42 billion naira, but auditors have put together a 20-point query on the general state of their 2009 accounts. Now, this is not the first time that the Nigerian Stock Exchange comes under the spotlight, and in fact recent allegations of impropriety and succession battles have really dealt a blow to confidence in the ability of the NSE to administer the capital markets in Nigeria. Has it had any effect?
Okay, these allegations are very key this time around. Just like you said, it's not the first time, but this time it's coming from an insider. A member of the board of the NSE is raising serious issues as to major drop of income. Cash position of about 9 billion over 3 years has dropped to a negative of about 3 million. He's an insider, and then this carries a lot of weight. That information would indeed rock the market a little bit, but it's not just governance, you know. We know we've been working at it on the banking and other institutional side of it. What we're going to see really is SEC, that's the regulatory body, coming more on regulations and monitoring of their activities, and then a lot of investigation have to be done. As you said, these are still allegations. They need to be investigated and found out properly before we start trading blames and all that.
All right.
I'd like to be careful until the outcomes come.
Okay, fair enough. Talk to us about Treasury bill issues of 55 billion naira. In what way has that influenced the bond markets?
Yes. T-bills were issued this week to the volume of about 55 billion, although there were bond maturities of about 37 billion, giving us a net debit in the system of about 18. These T-bills are issued on a calendar basis, really, so it's not like they are unknown. Really, they are to curb inflation. When these funds come in during mid-month, when federal allocations come in with other personnel overheads and other funds, T-bills and bonds will be issued, and then other major deductions have to do with FX sales from oil majors and other energy companies. So what we're beginning to see in the fixed income market really is that prices continue to drop because people are selling down, and yields are beginning to go very high, higher than what they used to be, more attractive. This is the favorable time for investors who want to key into fixed income instruments to come in, especially from outside of the country. And then I'd like to refer back to what you said about the stock exchange and then Amcon. Positive activity results that we'll be getting in the last 1 or 2 weeks is not just based on Amcon Bill. It has to do with banks beginning to lend again. So one major thing that's happening is that banks are lending, so they're selling down a little bit of their position on bonds and T-bills. So prices are dropping, and then we're seeing yields go up, really.
Okay, so an improved credit flow position. Let's talk about the Naira, which has strengthened on the interbank market in the last week, and that's largely because of the sales that have been generated by the NNPC, about $250 million. There's generally weak demand for Forex, but what impact have some of these interbank sales had on the fixed income market, if at all?
Yeah, what has happened really is that as they sell, Naira strengthens, and then it helps reduce the liquidity in the system. And then when this happens, it just aids what's going on really about the repricing of bonds, people sell a little bit of their positions to fund other obligations. So just as energy companies sell dollars and all that, other currencies, banks and other institutions who hold fixed income instruments to having to sell down some of their instruments to ease on the tightness in liquidity, really.